Basically, you had this break of the April highs, right? If I put a trend line in here, you can see here. I think let's talk about cryptocurrency. I think that was really a remarkable collapse over the weekend, kind of Saturday night Eastern time into and if Friday into Saturday night or Saturday day. And it was just remarkable, honestly, but not entirely surprising. If, from our last interview, we talked about how the deleveraging event in the stock market, if it did happen, it could cause this type of drop. And that's really exactly what happened. We've seen the stock market start to decline pretty sharply, and that freaks out the crypto market. And then you see kind of a follow-on collapse as well.
Yeah, I think everybody now that we're questioning, or maybe even the new thesis that Bitcoin had decoupled from the stock market and crypto at large had decoupled from the stock market, I think that thesis has been debunked now. I think we know that it absolutely is correlated, if not even hyper related, to the stock market and traditional markets. The real question is, was this all like the Omicron variant and all that, or is this just the more deeper structural issues of the markets and the amount of leverage in the system? This is just the first catalyst to the great deleveraging and unwinding that we're about to see.
Yeah, I'm more in the second camp there, where I think this is just a tremor. This isn't, a lot of people would look at this and say, this is huge. And we've seen down days 1% to 2% in the stock market, multiple ones. I think this is just a minor tremor before something bigger. You're starting to see the chatter from the Fed about tightening, tapering, all that kind of stuff. And again, notice the shift in the Fed, right? So, I think the last time we talked, Jerome Powell was still being very, very dovish. And all of a sudden, he's done a little bit of a 180. And I'd like to just point out to your viewers that what changed? And the answer is he got reappointed to the Fed by President Biden, who, by the way, has a midterm election next year. And a lot of his voters are middle income, lower income, who inflation really hurts, right? So all of a sudden, you've seen him kind of turn more to the hawkish side to try to get inflation under wraps. My guess, it's all tied together. And the market doesn't like it, right? The market wants that nonstop flow of money to just keep propping things up. And it doesn't look like, listen, inevitably, I think the Fed is still going to always be there, but they're not going to be there quite as much as they have been.
Yeah, that's interesting. And I wonder if and what they can do this go around. They have to let it deleverage. Wall Street and the banks have been the biggest beneficiaries of the monetary easing and the current monetary policy that we've been experiencing. Main Street was killed. And now inflation, he can't deny it because it's fundamentally changing the behavior of the consumer now. 2 months ago, not so much, but now with gas prices, with food, with rent, with the cost of healthcare, the cost of just everything that people are doing every day in our lives is at a point now where it's changing people's behaviors. He can no longer deny inflation, and I think at the last meeting, he tried to put that away as easily as he could, and as polished as he possibly could, to say that we're not going to use that term anymore. Transitory.
Transitory is dead now. That's not even part of the equation. Yeah, I think it's remarkable how things change like that. And again, the markets are somewhat slow to react because even though we've fallen back off of the all-time highs, we're really not down that much. Markets are rallying today again. And I think you have to remember that there's still buy the dip mentality. So it hasn't soaked in fully to all investors. I think big investors are starting to recognize, they're always the first ones to recognize that, hey, we got to be a little bit more cautious here. The Fed's not going to bail us out. But, the small investor is still in that conditioned mode of buy the dip, buy the dip. And I'd also like to point something out. So, we always talk, or you hear the talking heads talking about Omicron and how, why is this causing a sell-off in the market? We've had past Delta variants and so forth that didn't really cause a sell-off in the market. And I'll point this out, folks. So when we initially had COVID, right, and in March of 2020, you saw this big decline. The Fed came out with bazookas blazing with extra money. The government was printing. They were sending checks to the Americans, all Americans. And basically you had inflation at 2% or less. The reason why the market gets scared now with Omicron is because with 8% inflation, the Federal Reserve cannot come out with bazookas blazing. Again, their hands are tied. And that's why, if I would have no doubt that if the Fed was going to print as much money as they did prior, the markets wouldn't care about a new variant, even if it was more deadly, because the money would just flow into the system. But they can't do that anymore.
Yeah, and I think that was the signal he sent last week was start taking profits. Here's what we're going to have to do. Here's when we're going to do it. And I think the markets had already started a couple of weeks prior, understanding where we're at now. But here's the real question. We know you can probably draw down 30, 35%. No big deal. That's probably where we should be arguably anyways. Mm-hmm. All assets across the board should be about 30% less than where they are now, just because of what we've seen over the last year and a half from the Fed and their policies. What if it hits 50, 55, 60%? Do they jump in at that point, and what can they do?
Yeah. So in my opinion, absolutely they'll jump in again, right? So first of all, I think it's important to recognize that you've already seen a big decline in oil. You've already seen a big decline in natural gas, right? Natural gas has just fallen precipitously. So you're going to see certain metrics on inflation starting to come in. So the Fed can start to claim somewhat of a victory. But my issue is that you have this longer term, systemic inflation where it's more like the wages rising. That's the issue here, is that wages rising, when you go from $15 to $20 an hour or $10 to $20 an hour, there's no way any business can put through all of that cost on the consumer day one. So what they're going to do is they're going to kind of put it through 50 cents every 6 months. And that's going to keep that inflation kind of boiling over, even with commodity prices coming down in the short term. So I think that's something people have to kind of recognize, and it's something that you should pay attention to. So you're going to see the Fed claiming somewhat of a victory. I think you'll see the Biden administration saying, oh, we're bringing down inflation, but I don't think you're going to see inflation go back to 2%. I think 5% is probably where it settles.
Yeah. And there's a lot of data that they don't take in for that calculation anyway. So real inflation at the consumer level that's what's driving behavior. And those metrics, I think they're starting to become aware of. And, and I tell you the other thing, and I think you said it in some of your other interviews I've been watching the last couple of weeks, with the different shows you're on, 2018, is really the benchmark to be looking at. And what happened in 2018 when Powell said there isn't any inflation. So we're going to, go ahead and start tapering back. And we saw what happened with the markets, including real estate, 2018, 2019. And here we are now, where he is saying we do have a problem with inflation. They have to pull back. So, it's going to be interesting to see how far this correction goes.
Yeah, and that's one of the reasons why, since kind of like July or so, I've talked about the potential for Bitcoin to fall to 20,000. And my key metric on that was some sort of deleveraging event in the entire system, which again, you could arguably say maybe is starting here. This again is very minor if it is the start of it. But if you get a situation where the deleveraging occurs in the market, and let's say the stock market drops like what we were mentioning, 50% or so, it absolutely will trail through to cryptocurrency. And if you already saw a decline from 68,000 down to, I think the low over the weekend was like 42,000. I mean, imagine if the stock market declines, what's the stock market down 6% from the highs? Imagine if you're down 50%, what the impact on cryptocurrency could be, especially with all the leverage in cryptocurrency.
Yeah, well, that's, we saw that last March, right? March of 2020, Bitcoin is going to be, and cryptos, they're going to amplify what the markets are doing by, 3 or 4 times. And we know cryptocurrencies, altcoins, they'll draw down 80, 90%, whereas Bitcoin, if Bitcoin draws down 50, 60%, they'll draw down 80 or 90.
Absolutely.
The real question this time around, and it's really interesting too, in terms of people saying that we can never get back to certain levels, but we will definitely go to certain levels. It's really interesting, the psychology that's out there when it comes to Bitcoin. Like a lot of people said, we'd never see 60 again. We'd never see 50 again. We'd never see 40 again. And absolutely under no circumstances will you ever see 30 again, much less 20, but we're going to see 100. We're going to see 200. It's really interesting that philosophy and that psychology, and nobody really knows, but what it looks like is there's no appetite above 69,000, zero.
No. And in fact, if I show my chart of Bitcoin here, this is something that I think I might've even pointed out last time I was on, which is basically you had this break of the April highs, right? If I put a trend line in here, you can see here, you broke above these April highs for one day, just one day right here. and then one more day here, and then you quickly came back underneath. And to me, you had all these smaller investors screaming it was going to go to 100,000 by the end of October. Then I heard November. Now I'm hearing December. But when I look at this, I say, why couldn't it, with the sentiment as bullish as it was there, why didn't it break higher? And the answer is that you had big money selling into that. I mean, there's no other reason why, when you had so many small investors piling every last dollar into it, that it didn't go higher, other than you had bigger players selling into it. So I think people have to recognize that. And really now you have a significant double top. And I know people told me I was wrong when I said, hey, there's a 4-year cycle in Bitcoin, and everyone's like, oh, well, it's changed. It's not the same anymore. It's a different, but really at this stage, you still have to go with that until proven otherwise, right? I mean, that's what we look at on charts. We look at these kind of metrics from history to kind of develop what we know for the future.